So I want us to dive deeper into AML in terms of how do banks go about, or the financial institutions go about implementing safeguards towards AML, anti-money laundering systems and all that. So there is something called global policies that they have been enshrined or have been established by the FAFT. It's a task force that is there that normally provides, like, it describes, like, in terms of the offenses that are mainly in the anti-money laundering systems. Like, it gives just the structure of how, in terms of the terms that are used, and what are the precautions, and it is normally an universal kind of policy. Then after that, there is something called within the global AML, the AML policy, we have the SOP. This is what now goes into, this is like standard operating procedures that are there in the banking, which helps them to detect or to know there is an issue or there is a red flag within the system. So how do banks prevent or deduce or detect? So there is the detective controls, and there is preventative controls that the banks or the financial institutions normally implement. For example, a preventative procedure or control that they do is during the during the onboarding of the client. They do customer due diligence, where they ensure that they understand the customer that they are getting involved with, what kind of industry he works in, what kind of businesses he processes. Just to have, for example, when you go to a bank and you are told, when you're registering an account or you want an account, you are creating an account, there is a form you are given and you fill out. So they will even ask you, for example, how much do you expect to get into this bank, or that. This is some aspects of AML that are implemented so that they can understand their customer, they can understand the risk level of the different clients that they have. After that, there is something called, because now you have the client within the systems, and within is part of your client. So how do we go now to detective controls? For example, there is something called transaction monitoring. That's one of the processes that is done, where there are people who are called analysts, the crime analysts. So their work is to check where there is issues within the systems, in terms of deposits, how frequent is the deposit, and most of this is also automated in terms of the banking software has a capability of even giving alerts on certain patterns that are not well aligned, or are not aligned to the client, or the way the risk level of the client. For example, there is something called structuring. So where the client can have a kind of deposits, where several agents of people can be used to deposit money into a financial account, a specific account. So this is normally they put money that is below the threshold. Like, for example, if it's 10,000 euros or 10,000 US dollars, they can put like 9,000 US dollars. Each of these account agents normally send or normally deposit money but it's below the threshold. That's one of the ways to even know it's a red flag within the system that it can know this might be a form of money laundering that is happening. We have, for example, also we have transaction from countries that have very high levels of money laundering. They have weaknesses within the AML. For example, you have Iran, where it's some of countries that have been listed within the AML. So these are some of the factors that can be considered or can help the banking or the financial institutions to know or to prevent money laundering. We also have something called enforcement controls, where in case they find the risk is too high for a specific client, they can enforce. For example, you cannot deposit, for example, a certain amount of money. They can even de-risk in terms of terminate the contract between this client and the bank, which is it's not a normal case, but if was to come, that's one of the ways to avoid the bank being part of these anti-money laundering aspects. So there are people who have been given these tasks. They do preventative controls and also detective controls, and also they do enforcement controls. The main thing is to detect. For example, for the detective, they get to know the client, and also they do risk assessment and understand is this client is the transactions he's doing going towards money laundering. Can we detect an aspect within his way of transactions, the way the transfers, the different from different regions, maybe regions that are more prone towards money laundering. So these are some of the things that banks use to prevent money laundering. We will do a case study of how money laundering happens, and you can get into more aspect of it. So some of the things we will continue discussing or we will talk about is sanction screening, and also we will speak about we'll do a case study on a specific different case studies. So this is just introductions. Then after that we can understand more about this area of AML in a bigger way, because it's something that is affecting banks and also like financial institutions in this age specifically, where different countries have different, like the world has changed so much, so it means you have banks also, the risk of this money laundering is also very high, so they are taking a lot of precautions and ways of taking a lot of investments into preventing money laundering cases. Yes. See you next video.